Let's talk about currencies and why the dollar relatively has strengthened according to all other currencies. It's been ripping, ripping, ripping. If you look at the JPY, it's been down 20%. They said that they were going to devalue 10% in order to boost GDP 1%. Well, now it's down 20%, so GDP better be up 2%, but it's not. In fact, we're probably looking for a global recession. The British pound is not looking good either, but it's better than the euro because the euro has a lot more issues. At least the British broke off from the EU and don't have to deal with the same issues of debt coming from Greece and Italy. Although a lot of these currencies may strengthen if we're going into a recession because debt starts being paid back and you need dollars or you need euros to pay back euro-denominated debt. But remember, in financial institutions, everything is denominated in dollars. That's what they're really trading in. So the baseline is dollars, and then they lend out for housing that are denominated in their local currencies. Housing prices should collapse, and if they do, look for the Canadian dollar to appreciate for a second and then defaults take it much lower. I think that the US dollar continues to strengthen. It's a tough environment to be doing anything in, but if you're looking to get into the indices, I would buy US stocks. It makes no sense because our trade deficit is getting worse as we're getting stronger, but everyone's going to be going to safe haven assets, and U.S. blue chips are those safe haven assets. If you look at the Nikkei, it's been falling apart. It's not looked good for a while, and like I said in my last video, the Euro stocks, they're already in a bear market. So if we're going into a full recession, you want to have cash, whether it's euros, JPY, whatever it is, you're going to want to have cash. So all currencies could strengthen together, but relatively I would expect the US dollar to continue to be king. That's because we're centralized to all of this, and that's because we've been tightening and we've been beating up our bonds like nobody else has. So the most hawkish Fed wins. It's a relative game of game theory, and man, I don't know what the Fed's looking at because it looks to me like all of those inflationary pressures that usually come, copper is one of them. Copper took that mega rip, but it usually leads you into a recession. It shows you as a leading indicator when recessions are going to come. So the fact that copper's falling apart is not a good sign for anything. So keep cash on the sidelines. If you're getting into indices, trade it with options, is my opinion, because you don't want all that downside. You have limited downside when you buy calls. You just buy a little bit, and you can trade it up from the 4,000 number. You see that candle, maybe we go back up to the 4150 or something like that, but I would continue to fall down, and people are going to be going back into dollars, and these bonds should catch a bid because they've been absolutely crushed, and over the past 2 hours they have been. The 10-year that prices most equities, hopefully this will bounce. If it doesn't bounce, people are going to be, looking at stagflation. But then again, I think the inflation fears are overblown. What we really should be worried about is growth. So that's my FX analysis. Hopefully that's useful. I'd be staying in US companies here, away from Euro companies. The third world, it will bounce if we do get out of this problem. We do hope that we will. Then, it would be nice to see the US dollar devalue so our trade deficit gets better. But as far as this global situation gets going with war, I'd expect people to stay in safe haven assets. People used to think that the JPY was a safe haven asset because they would always just be holding it steady, increasing their debt, holding it steady, and they can continue to add on to their debt, but eventually the Pied Piper will come, and I believe that it's going to come hard for JPY and it's going to come hard for Canadian dollar because of housing prices. I think that housing defaults are going to be pretty significant with mortgage rates going up. So that's my call.